name is Ignacio Salazar. I am the CEO and the MD of Highfield Resources. Highfield Resources is a company trading in ASX. We have a project in Spain called Muga in the north of Spain. And we are about to start, we are starting already construction. So we are moving ahead very much with this project. The aim is to produce 500,000 to 1 million in the second phase tons of MOP, potash, and a very, very important project in the current circumstances in the south of Europe, in the current geopolitical situation and the need for potash and fertilizers in general in Europe and globally.
Fantastic. Ignacio, thank you very much for coming on the show. I think we spoke to this company back at the end of 2019, a long time ago, and obviously things have moved on significantly, not least of all, you joined in the middle of 2020. So look, I think it'd be worthwhile people just understanding some of the definitions and terminology, because I think it's very easy for retail investors to confuse and conflate words such as fertilizer and potash and MOP and SOP, and it gets a little bit confusing. So can you break it down for us, if you don't mind?
Absolutely. So fertilizers are key. I mean, that is half of the agriculture production is thanks to fertilizers. When we talk about fertilizers, mineral fertilizers, we are talking about the famous NPK, nitrate, phosphate, and potash. K is potash, by the way, not the P. And basically, these are the elements which generate healthier, stronger, and at the end of the day, more productive crops and generate a lot more yield in every land where you are producing. So a lot is, you are absolutely right, tends to be some confusion about the MOP and the SOP products when you talk about potash, if nothing else because Australia has had more SOP projects. Rather, MOP is a bit of an exception in this case. The MOP market is a lot bigger, is 10 times as bigger as SOP, and I must say our project is an MOP project, and basically the dynamics between demand and supply of both projects recently have been very strong, but MOP have become stronger. MOP muriate of potash is more designed, is 70 million tons globally of production compared to 7 in the case of SOP, and the demand and what is servicing is the normal crops that can work with MOP. I mean, in the case SOP is more exceptional. It is trading at a premium because is supplying the crops where you need you cannot use MOP, and basically is more strawberries is a bit more special crops. So that's why it's smaller. It has a lower content of potash, but at the end of the day, is simply those type of agriculture is not suitable to MOP. So very different products, and in our case with MOP, it is one of the few projects that is going ahead in our case.
Okay, so I need to understand the thesis for investing into this space, okay? Because I think myself and I imagine a lot of people watching this will be, it's not something that they will have typically invested into. It's very, it kind of feels very niche, very specialist, right? So geopolitics must be a big part of this. It kind of felt like a few years ago there was a kind of cabal of countries, whether it be Russia, obviously a big part of that. Some of these Eastern European countries being big producers and big part of the market, and you kind of got bigger mines like the Jansen mine with BHP, etc. You seem to be very few players controlling the market, controlling prices, controlling distribution. What's changed? Because obviously recent events in Russia, Ukraine, or perhaps obviously in the near term may have changed the geopolitics and dynamics and security of supply and the way that this material flows at the moment will have changed. But generally, is the market growing, or is it flat? I mean, what are we looking at?
Yeah, no, I mean, things have changed. Let me say what has not really changed is that at the end of the day, fertilizers, what we are trying to do globally is to produce more food with less arable land. And what is really happening is that the population, as we know, is only growing, and the arable land is only decreasing. And the only way that you can make that equation work is because you are putting more and more fertilizers. So there is very strong case, very strong fundamentals. And that is obviously the main crops. We are talking about MOP here and potash as other fertilizers. So those fundamentals are there. And I mean, it's difficult to see any other trend, but that being sustainable in the long term as far as population grows and arable land decreases. No, what is really happening in this, I think you're right. I think it's a lot more and more understanding and knowledge to some extent, because VHP as well has started is working on this project, Janssen. But in any case, in potash, very much. Is a relatively small number of players that are here. There are 3 countries which are the main producers. The first one is Canada, the second one is Russia, and the third one is Belarus. So I mean, and then after that, you really go a lot lower in terms of how important it is in the market. So as you can imagine, Belarus and Russia, now that we talk about things that are covering 40% of the global production between the two of them. So Belarus already been suffering under sanctions from the European Union and the US, even well before the war in Ukraine. I mean, that was more related. You may recall that journalist, a Ryanair flight that was going from one European to another European country and was put down in the sense of asked to land in Belarus, and the journalist was put to jail. No, so as a result of that, the sanctions have been in place already for a while, and the sanctions start to be in place in Russia. So 40% of global production comes from these 2 countries. In the case of Europe, half, or well, if you look at depending the years, or even more of the consumption of MOP in Europe used to be coming from Russia and Belarus. So I think Europe is becoming a lot more aware of the need to have security of supply of gas, food, and fertilizers. I mean, the dependency in the case of potash is even bigger than the dependency on gas. That is probably the one that is being discussed more. And that is where, of course, a project in Europe, and well, the only one at this stage to be able to be put in place and running and operating quickly is becoming so strategic. Our location in Muga was always a key differentiator, because we are closer to the market. Most of that Europe, even we are better positioned than anybody else to access the Brazilian market. If we try to manage the seasons between southern and northern hemisphere, Brazil is also a very important market. But especially with Europe, our project obviously has a big strength. And now with the current situation, Russia and Belarus, and the need for Europe to look for other alternatives is becoming very, very strategic.
It is, because when we talked in the past, and I think you still talk about in some of your literature, obviously Brazil is a very big and an important market. You're also exporting to Africa as well. Do recent events change your thinking in terms of where you sell into? Of course, Europe. Yes, you just pointed out quite well, concerns over Belarus and Russian supply and the sanctions that are being imposed there. Is Europe the more obvious? Is it the smarter play here, or are you concerned about the sustainability of that? Because the Russia situation may fall away, the Belarus situation may fall away, and then you've kind of got an oversupply into this market, because you'd need to secure long-term contracts into this market, because there's a kind of mineral and metals critical mineral list all over the world at the moment. You're in Spain, you're next door. It would seem logical. Are you working on that at the moment? Are you having conversations about that at the moment?
Yeah, absolutely. So very much. I mean, this was the biggest. There are a few key elements of this. Is a relatively small project in the big scheme of projects globally, but there is a huge 3 key advantages we like to say. One is about the infrastructure we have in place, and the other one is that we have very, very the mineralization is very close to surface, so we don't need to build a shaft. We really access mineralization with a couple of ramps. And the third, probably the most important one, has always been the location. I mean, as I said, the main competition, the main producers are in the middle of Canada, the middle of Russia, and Belarus. So they need to access Europe. Well, in the case of Canada, they need to go to Vancouver through the Panama Channel, even to access Brazil or Europe. And exactly the same in the case of Russia. They have to cross half of Russia to get to the port in the north of Russia, to come to the Rotterdam, to split the cargo in smaller cargos and keep going. For a high volume commodity like potash, we are talking about a commodity that is moving a lot of volume. Transportation and logistics and access to the markets is key. And by the way, in the case of potash and the case of fertilizers, it's very important to have the customer service and to have the product at the time, the season, the work in the farm requires you to do that. So to be flexible at the same time to be close makes a big difference. No, I think from the beginning was always in our mind the plan to supply 75% of our production to Europe. So obviously, always that was the case where we have the competitive advantage. And in our mind, again, the 25% to Brazil was more about taking advantage of seasonality. Now, I mean, Europe alone is 7 million tons of potash, of which three and a bit were coming from Russia and Belarus. We will be producing 1 million. So it's 1/3 of that gap that we'll be covering. But in any case, even if Russia or Belarus would be in full production, we have an advantage logistically. And in the case of Brazil, is as well 8 or 9 million. I mean, these are almost each of them is like the global SOP market we were talking about before. No? So we are a relatively small player in the big scheme, but the location makes the huge difference. It's only the point that this current situation is making Europe a lot more aware, and I come to that point of that element of security of supply, let alone economics and the fact that we will be more or less profitable. And that, coming back to part of your question, that is helping us. We are in the process now of finalizing financing and working with the banks. And as well, we are been running for a while, several months, a process with the strategic investors that we are now forcing it to crystallize, to say, because, well, first of all, we are moving ahead with the project, so we need to make a decision soon, but also because we see a extremely positive environment where people and distributors of potash and big players used to be supplied by Russia and Belarus, and they need a different equation. No.
Well, let's talk about the kind of economics and markets and pricing, because Europe, okay, 75% of your product into Europe, which is great. I'd love to understand the kind of distribution and sales mechanisms there. But you mentioned something which is obviously more important at the moment. Okay, the economics of the project. Okay, NPV 8 of like 1.9 billion and 42% IRR. I mean, that's really, really good. Do you need? I've seen some conversations about MOUs, but do you need to have contracts in place to be able to kind of get, whether it be the strategic partner in place or bank finance in place for the debt component? Or, I mean, how have you kind of constructed the finances around moving into this kind of build phase of yours?
Okay, you touch on a couple of points that are, I think, very separate. One is the economics and the other one, the financing. On the economic side, and as you say, is 2 billion at the prices. When we put that feasibility study, that was at the end of last year, at the prices at that time, it was 3 billion. At the prices today, probably is 3.5, 4 billion. So it's very sensitive to the prices, not meaning that those prices are sustainable, but just to give an indication of how sensitive it is to that. Now, I like one element that probably helps a lot, because I was making the point about transportation cost before, but also maybe I'd like to highlight something. The European prices, and this is because the way the market works, have been trading for years, and we can only see that going forward at a premium to global prices, to the Vancouver prices, no? Because at the end of the day, the price setter here are the Canadian producers. And this premium is $50 to $100 per ton, traditionally that price, when we were talking about prices of 300, 400 in the past. Now European prices maybe 1,000 or more, no? But talking about long-term prices, 300, 400. So bear in mind, 50 to 100 is a premium, and that premium is related to the transportation cost difference. Our operating costs are 80. So, I mean, it is extremely significant, the advantage that you have in terms of transportation and the fact that you are in the middle. I mean, rather than to be on the other side of the world, you are in the middle of the market here in Europe. Talking about economics, aside from the numbers that are already in the press release or in the feasibility study, probably to make that point. And then the other points I referred to before, that the fact that we don't build a shaft, that we don't need to build a port or rail tracks or motorways, because we have that in the north of Spain already as part of all the development here. But talking about the financing as well, we've made a lot of progress. It's been a very long process, as you can imagine, in terms of due diligence with the banks. And we announced recently 312 million, a term sheet of 312 million, plus, well, yesterday, a deal with another term sheet with Macquarie about mining equipment of another 23. So we are getting about 335, 340 million already in terms of debt. Our initial capex is 400. There will be obviously the need for more, a bit more when you add working capital and payment of interest and things like that. But it's a big chunk of that is already well advanced with the banks, and we are making progress to finalize the process with them. That is exactly why, as part of we are trying to move all as you can imagine, everything in parallel. This process of the strategic investor, I think we've been lucky that the current situation is helping a lot, but this is the moment where we need to crystallize that, because I mean, obviously the interest is there. So if we can get a partner, which I think will add not only from an equity or from a capital injection perspective, but also can add from as a customer, as an off-taker, etc. I think that would make things a lot more attractive from an investor perspective. So that is going very well. You never know till you end and you finalize the process. And whatever it is, if it's anything else, we can always access the markets, which I think markets are always up and down. But in the case of our project, we've received a lot of interest as well.
Right. Okay. So looking at contracts, getting your finance. Yeah, contracts are really important to me, because it kind of helps you today with your financing and the cost of capital, which is a big part of your economics. And what I'm sort of intrigued by is whatever contracts you have in place today to kind of get the economics in place is one thing. The second component is during the construction phase, which is a 24-month type process. Can you, with the addition of additional contracts, refinance out your finance package during that phase, or would you wait till you've actually constructed?
Well, the contract, let me say, and maybe that tells you how confident we are about the marketing side in this project, that I didn't catch that part of your question. So as I said, the strongest point in this project is the marketing side and the fact that we have access to the market. So in a lot of, well, most of these products, that is a big question. Who are you going to sell to, and how you can do it, and can you sort of take away risk here? I mean, in our case, we've taken a completely different approach, because we saw this as an asset rather than something to be managed. And I think we've been right doing so. I tell you what has been happening, but because these strategic investor discussions, typically, I mean, every strategic investor is different, no? But very strategic, this strategic is about an off-taker that puts equity or puts an injection in the company. So the contracts, we have more than what we need of non-binding MOUs, but the fact that they are non-binding MOUs is something the company has been done on purpose, because we see that a value by getting binding agreements with people or strategic investors that also would participate as partners in the project. So we are in our strategic investor discussion. It is it's obviously a lot more, but to simplify, off-taker plus equity or some sort of injection. So we are not looking at off-taker because we know we can always do that. Now, what we've done, in fact, the absolute minimum to keep this optionality for us, and the absolute minimum has been driven by the request from the banks as part of the project finance exercise. And what they said is, well, get these non-binding contracts, which we can get, no problem. And we should get, by the time that we are going to draw down the money, we should have 70% or whatever of the production already contracted in a binding contract.
Okay. Well, that's the interesting bit to me, because I'm sort of thinking, hang on, why at your election would you choose to have non-binding? Because the banks surely would want you to have some degree of certainty. Of course, you can go and sell in the spot market, and hope that goes well, and there's enough examples in the past where that hasn't gone well. But so the banks will be conscious of that and say, I need some certainty. So you're saying that at some point before, what is the point at which they say you must have 70% binding contracts in place?
All the discussions that have gone around this, where we will need to have the final agreement. But all the discussions tend to be that you need to have 70% or whatever is the number at the time of first drawdown of the money from the banks. But whatever it is, we don't have a final decision, but we know that we have time. Why? For us as a company, it's a big advantage because it's something that we can offer now the strategic investors, and we are offering value because of, and these days more than ever, from the point of view of security of supply in Europe, we were talking about. But and the banks, as you say, they like this risk, but they realize that the project doesn't have an issue. They also know the project has a huge advantage, so they are happy to allow this to go until that point.
Huge advantage being what, Ignacio? Because you're a small player, right? And in a land of giants, so there's always risk. So why do you say that?
Well, that you have now clients of ours, big clients, who have 80, 90, 100% of their potash coming from Russia and Belarus today. And they say, oops, maybe they don't receive it anymore because really the sanctions simply don't allow them to do it, or they are not so comfortable going forward in any case. So they don't have anything else to look at. The only project, just to create a project like this takes 10, 15 years. So the only project that is there about to start in Europe is this one. So there is obviously, if they can guarantee, we are talking for the first phase, 500,000. As I said, the gap of Russia and Belarus is 3.5 million. So if they can guarantee 100, 200, 300, it's going to be, you can imagine, a lot of interest. And I think we were lucky, clever enough to leave this door open and now to take value and share value with a partner going forward.
Right, and then there'll be a strategic partner. Does that strategic partner, are they just money? Are they distribution? Are they offtake? What are you looking at?
The typical, because again, strategic partners, as you know, everyone is completely different and might be the sort of the standard profile, is off-taker plus money. Yeah.
Okay. And off-taker, and again, in terms of that, you talked about earlier about optionality for yourself or discretion for yourself. It's like you would want that strategic partner not to be overwhelming you. You want there to be enough left on the table so that just in terms of risk management, right? Risk mitigation. You don't want this off-taker to come and say, we'll have 70% of your company, right? So again, talk to me about the profile that you're looking for.
No. Everyone is different, and depending on every partner, you might have a different approach. No, of course, you sort of tailor your approach to the specific partner. But basically, the standard one is, of course, that you share part of the production, and if you have the luxury, and to some extent we have, that the market supports you, that you might have several off-takers interested on this and potentially other type of, then yeah, you are absolutely right. You prefer to share that between a bigger group because you are not so concentrated on anybody in particular. No, so you are also keeping a bit of spreading your risk and keeping all your a bigger group of people to work with. Yeah, absolutely. And I think the interest of the project and the current situation, both from the geopolitical and the need for potash supplied from a source in Europe, plus the potential of the project economically, so the interest from purely institutional investors is there to allow us to get the best for the company.
Right, and if I look at 2022, I mean, if I look at the previous 5 years, it's been a fairly flat market in terms of pricing. Obviously, it's seen this kind of resurgence in the last sort of 12 to 18 months in terms of pricing. Likewise, your stock has done well in 2022, and you've kind of got this 30-year plus life of mine in what's at the moment kind of feels like an increasing price environment. But I want to, in that context, I want to understand your strategy, because when people talk about strategic investors, it's usually a sign for actually we'd like to be taken out, we're done here. But with a 30-year life of mine and an environment like that, is there more benefit to your shareholders, to you, or say maintaining control and continuing to kind of grow this project and and beyond, than handing over the reins to someone else to kind of take control? I mean, what's the board thinking?
No, we are talking about strategic partners. We are not thinking about somebody taking over. We are talking about a partner to help us to get to production. And very much we see, I mean, that I can reply black and white. We see a clear value for the company to get this project into production. I think there's no doubt in our mind that after what we've gone through, and now with the environmental permit, the mining concession, we get the first construction license, is another one to come, and building the mine and getting the mine into production is going to add a lot of value, because we see, by the way, I mean, the share price has been doing quite well in the last couple of years, but we see a big gap still with the potential, with the NPV of the project and the potential this project has. So we are convinced it's a lot of value. Now, as we already, we want to keep very much focused on what we are doing, because it's a very clear plan ahead of us to build the mine and do first phase. But as you see, we have second phase, which with half of the capex, we double production. So that is something the company and potentially something that you can do with the money and the revenue, the cash you generate during the first phase production. And by the way, we have other projects around the basin. This is an area, this project, we are in between Navarra and Aragon, close to where we are. We are here in Pamplona, no? Close to the south is a couple of old former mines, and in the other side of the basin in Catalonia, there are other potash mines that have been producing for 1,800 years. No, so there is plenty of potential in the basin to become bigger as we go along.
Okay, and so we've gone local, so let's stick with that. So Spain has kind of got a checkered history in terms of supporting mining in country. And I think that's fair to say. Local opposition, not getting support at once from local government or even national government in some cases. Now you're in the space of potash broadly. Again, wrong label, but this is the way people view it. Fertilizer. It's a green product, and there's an underground mine with a kind of small surface footprint. Is that helping you get the support, get all of these licenses and permits that you've got in place? I mean, what are the kind of factors that you've had to overcome here? Have there been sort of social license issues?
I think we found, I mean, I've been around for the last couple of years. We really have done a lot of work there, so no way to go around that. And I come from Bilbao, so it's very close to Pamplona, so I know very well the area, and I've been heavily involved as many others here in the team, of course. So there is a lot of work at the end of the day. I even think, I mean, potash, it has to help. I mean, but sometimes it's, you know, people tend to put everything in the same basket, but obviously potash helps. And I think, as well as to some extent, everybody is aware of the current geopolitical situation, and that helps. I must say, at the high level, I have no doubt the full support for this project is there, but still, you know, you need to go through the different ups and downs in the administrative process, and you need to manage that extremely carefully. So the project, I mean, when you look this objective, of course, I think I can say this objectively, despite being the CEO of the company. But when you look at the amount of wealth, employment, working in the population areas, I mean, this geopolitical angle, I mean, the value that we add in a product that is fighting against hunger in the world, or just if nothing else. I mean, it is difficult to go against it. We have had a lot, massive support from everybody. It's very small. You can always have one or two people that doesn't like it as a matter of principle. But I think we have put a lot of work and have managed a lot of support. We got this license from one of the two towns. I mean, it's a small town, 40 people. So that is amazing. And I think it's it underlines all the work and all the support that we have from the community, apart from many other signs of support that administrations are also putting for the project. No, but we keep working on that. It's still the other license to come. And now that we start construction, I think is even more. This sentiment is growing bigger and bigger as we go ahead, and we are making progress with the project.
Interesting. Okay, because I think it's easy for companies to kind of point to the socioeconomic benefits to the region, but if there's any kind of controversy or any kind of objections locally, those things need to be handled sensitively, for sure. And obviously ESG is such a big topic at the moment globally. Do you think that kind of ESG component will allow you to, I know you're charging there's a European premium, but do you think that given the nature of what you're doing, do you think there's a sustainability to the pricing that you're going to be able to get? Because obviously the last 18 months have seen prices, rocket. I'm interested in what the next 5 year looks like, the next 10 years looks like, in terms of the economics, not just for your project, but broadly for this sector.
I think we are going to have a premium to our potash, no doubt. But if nothing else, is the global economics, the fact that we are closer to the market, and the European premium we've seen for always is going to continue, and also, as well, we are going to have the capacity to service customers with a lot more flexibility, speed, and we will be a lot more agile than any alternative. So that will allow, automatically for a premium in the prices that we are charging. To some extent, even what we are putting in our feasibility studies, I think probably doesn't reflect all of this, because if we will have 40% of our production, we could sell it around the mine, by truck or and that, let alone how effective it is and how much you save, is again the ability that you have to provide that product at the time the farmer and the distributors need it, and not earlier or before. And that the people are ready to pay an extra for that, absolutely no doubt. In the case of ESG, is helping us already. I think we made a lot of progress with the banks and the project finance. And one of the, as you know, is 4 banks running this syndicate. Is BNP Paribas, is SocGen, ING, and Natixis. And basically, I mean, these banks see a big plus from the point of view that this is a European project and all the geopolitical situation, but obviously the ESG credentials of this project. In our case, and it's a lot to talk about, but if not, I think it's a very key element that is a huge differentiator. This mine will be leaving no residue, no mineral residues on surface. You have these days in Europe, the current mines in Europe are building a white mountain of salts as they go along, and they will remediate, of course. In our case, we will part of that, a small part, will be upgraded and be sold as salts, and the biggest part will be backfill into the mine. And that's part of environmental permit and the mining concession, and that is a huge differentiator of this project that nobody else has done. No?
Okay, and just one last sort of area or topic of conversation for me with this is, and it kind of relates to the ESG component in a way, but more the economics is the simplicity of the mining. It's underground, but in terms of technical risk, is there much? It's because obviously with different minerals comes different sorts of challenges in terms of whether you're chasing veins or the metallurgy in terms of extracting. But for what you're after, is this relatively simple mining?
It is very simple mining and very simple processing. And again, sometimes maybe people come with the concept of SOP projects that have some innovation and some difficulty or different ways. This is a very standard room and pillar method that we will be underground, but room and pillar. We are not chasing vein. It's a very broad band of mining. Obviously, you are underground. You have to be working with care and professional. But compared to other projects, this is a very. We don't have very standard methods. We don't have a shaft that adds a significant complexity to the handling of the product. We will be accessing the mineral a couple of ramps of 2.5 kilometers. That makes things a lot easier. And the processing is again is a crystallizer, is a very standard processing methods that we will be using. No? So from that perspective, the project is very low risk compared to our peers and projects of this nature.
Beautiful. Ignacio, look, thanks for coming on the show. Nice reminder that you're here and you're in the build phase, about to be in the build phase, and then hopefully in the production shortly thereafter. But so stay in touch, let us know how you get on with the financing. I think it's truly fascinating.
My pleasure. That would be great. Thanks a lot.